Alrighty, guys, it's Dave Santarelli from BreakingChartAlerts.com. Tonight's class, we're going to be going over 3 chart patterns that we trade at Breaking Chart Alerts. Alrighty, guys, so the first one I wanted to talk about, we actually went over an example like this later last week. A hook pattern is a short-term candlestick pattern that predicts a reversal in the trend's direction. Okay, so I'm going to show you exactly what we're going to be looking for with the hook pattern. The pattern occurs when a candlestick has a higher low and a lower high than previous session's candlestick. Okay, so here's a perfect example of a hook pattern from, I think this is from a few months ago. So we're looking for a few things. A stock that has had a large drop. So you can see this one here was up to about 125 a share, and we had a big drop all the way down to about 95, 92.50 a share on this stock here. Okay, so you have your classic big hook. You know, this is your shaft right here, the big drop, and obviously this is caused by an event. So a big drop, and then we have our base support right around 92.50 to 95, and then we start that incline and climb from there, forming that hook. Okay, so we have 3 segments of the hook pattern. We have the shaft, we have the base support, and then we have the hook forming. Okay, so that's the 3 things that you're looking for there with the hook pattern. Okay, wait for the base of the hook to form, so selling pressure is over. Once you see that base of the hook form, then you're going to be looking for that first candle above that 1020 SMA. Okay, and then your stop on this is going to be that base support, either 95 or 92.50, whatever you want to pick there. You can kind of see where they're consolidating. Okay, the first candle that gives the confirmation of a trend higher off the base of this pattern is the buy signal. So you can see you're getting the buy signal. And now what we're doing here too is we're utilizing part of our trade plan. You know, you're looking at that MACD, making sure that's crossed, that's looking good. That already gave the buy signal, which it should have if you have a solid base support area, and then that climb above that 1020. Okay, so the MACD is always going to help you out. These are usually my largest gainers when I'm trading hook patterns. You know, when you get a good hook pattern, you know, we're going to go over the targets and stops that we're looking at momentarily here. But a hook pattern is a great way to make some really quick money, because after that big sell-off there's usually some buyers that want to come in and get that value buy. You know, that big discount there from trading from 125 all the way down to 95 bucks. You know, it's like a 30% retracement there from those recent highs. So that's really important, because that's where you usually get those big volume and big candlesticks that come in afterwards there. Okay, so what is our target profit area and stop loss area for this chart? Our target is generally halfway from the top of the candle before the drop to the base of the drop. Okay, and we're going to go over that in a second. So if the stock had a 20-point drop before sell-off to the base drop, we're looking for a 10-point move higher from that base support. Very simple. So if it drops 20 points, you're looking for that 10-point climb there off of the base support. If it has a 50-point drop, you're looking for a 25-point climb off of that base support that we just went over there. Okay, so if there's a rare area of resistance somewhere between the base of the drop up to the middle of the shaft that we were just talking about there, from the drop, that might be our target area as well, depending on how much of a resistance area that's going to be. Our stop is a close below support off the base of this chart pattern. Okay. Okay, so again, you're seeing 55 as your high. Here is what happened on earnings. So you had an event that happened and caused this big breakdown, right? So you had this big drop from 55 all the way down to 43. So now this area is going to become your area of support baseline. Okay, so this, again, this is your base support. So this right here, this is our shaft. because I want you guys to be able to identify this. Because if you're looking at charts throughout the day, that's the whole point of traders having all these screens. You have big watch lists, big scanners, and you could go through charts really quickly and identify any of these types of setups. Because really, these are the only 3 types of chart patterns you really want to be trading, you know, with our trade plan. Okay. So now you have the shaft. Now remember, the shaft is going to be from the highs to the lows here. So if we have a shaft of 55 and base support at 43, what is our shaft? 55 minus 43. That's 12. So 12. So now we take half of that shaft there and we're going to add it to our base support. So half of the shaft is 6. So we plus 6, that equals 49. But we'll say we're going to use 50 as our target because I always like using round numbers. So 49. So we'll say 50 is going to be our T1 area. Okay. So that equals T1. So when you're looking at this chart here, I want you to immediately go up then to that 50 and draw a line across it at $50 a share. Okay. So now if you're entering into this trade, you say you got your target 1. What's your target 2? Well, target 2 is going to be at about T2 is at $53. Okay. So T1 at 50, T2 at 53. So now where can you guys tell me where is consolidation and where is your entry signal here on Intel? Or better yet, where does the hook start to form? First candle above 45. These candlesticks, they started trading side by side, right? So this area here is our consolidation, right? So this area here is our consolidation. So that means the first candle with body above 45, that's going to be our entry, right? So 45, so this right here is our entry today. Okay. Now, like I said, so now you got the 3 components of your hook pattern here. Actually 4. You have your top, you have your shaft, you have your base support, and then now you have your hook forming. So now you got the hook starting to form here, and now you're looking for a climb up to that target area. So this green line right here, this is called our hook part. And while I have it up here, this top is called our top. That's our recent top, I should add. Because I know people will be going back for a year and saying, oh, well, the recent top is $110 a share. Well, we're looking at the recent ones that was right before that event that happened. So this was the earnings day. Earnings caused that to drop there. Okay, so all we care about is the recent past 10 candles. Recent past 10 candles. If you had a nice breakout going and then you had that earnings that brought it down, you're quickly identifying the shaft, the base support, consolidation, and your entry point. And then once you get that entry point, you know what to look for. You're looking for that target 1, you're looking for that target 2, and then you're looking for your stop. And the nice thing about the trade plan here and using the hook patterns is 43, that is your stop. So your stop is $43. Your target 1 is going to be 50. Your target 2 is going to be 53. Okay, so if the stock's at 45 right now, you're risking $2 to make what? What do we say? $8. So that's how a hook pattern works. Okay, so now let's move on to the momentum pattern. Okay, so momentum pattern is looking to, momentum investing seeks to take advantage of market volatility by taking short-term positions in stocks going up or dropping and selling them as soon as they show signs of weakness. Okay, so here's a perfect example of Qs here. Okay, Qs, what you're doing, how does it work first off? The momentum. Okay, to find these types of chart patterns, we're going to be using our simple moving averages, and you guys know that. I want to make sure that the general market is participating in the general trend. Okay, so that's why I always look at, if I'm looking at Facebook, I want to look at the cues. Do the cues look strong? If cues don't look strong, I don't want to make that Facebook trade. Okay, that's what's really important about momentum. Momentum means that everything's going in your favor and looking good there. Okay, that's really important, team. Okay. So as long as the whole general market is participating in that trend higher here, what we're looking for next is utilizing those SMAs, those simple moving averages. We're going to be using the 10, 20, 50, and 200-day simple moving average. 200-day SMAs are something I use for stocks that I'm trading, that I'm looking to buy and hold for a few years. Okay, so that's really the only time I like to use the 200-day simple moving average. Because let's be honest, if we're trading options, we want to take advantage of something short term there that we're going to make some pretty big gains on. Okay, so 200-day SMA, that really is not going to tell us crap there for any short-term type of trades. But it is good for those that like to trade shares and like to do sell-covered calls for long-term. You know, it's a really great strategy to use. So we're using our 10, 20, 50, and 200-day simple moving averages as our guide. We're going to be using our 10 and 20-day simple moving averages for trades less than. Okay, that's an important little word right here. Okay. 10 and 20 SMA on trades less than 1 month till expo. That's really important, okay? Because the whole part of that is 10 and 20-day simple moving averages. All these are telling you is what the stock has done for the past 10 days and the past 20 days. So if you want to look for something what the stocks have done more than 30 days, obviously you're going to want to include your 50-day simple moving average. But if you care about what something's done 50 days ago and you're only getting something that's, 2 weeks out till expo, there's no point in looking at the 50-day simple moving average. So then you're going to be focusing and utilizing just the 10 and 20-day simple moving averages for trades less than 1 month out till expo. The 20 and 50-day SMA and possibly the 100, 200 SMA are for trades longer than 30 days out till expo. Okay, so that's where you're usually looking at a possible, like, for example, if you got in at this cycle that formed back here, right? And let's say you get something that's, 6 months out till expo. Like, for example, here's May, June, July, August, September. May is back here. April. Okay, so April, May, June, July, August, September, that brings you up to 5 months. Okay, so you're using that 50-day simple moving average as your stop for something 6 months out or longer. So perfect example here. If you want to set up a nice momentum trade, and just trade it just like that and not look for those, quick profit taking, jump back in profit. If you're looking for a full, complete momentum cycle here, you're getting in when you have that first crossover, either from breakdown momentum, no trade zone consolidation, to that breakout momentum or breakdown momentum. You're getting something 6 months out, and your sell is going to be that first candle below that 50-day simple moving average. Okay, so your entry is right there. Entry and stop. Okay, so that's really important to understand there with momentum. Short-term trades less than 1 month out till expo, you're using the 10-20. Longer than a month out till expo, you're then utilizing your 10, 20, 50-day simple moving averages. Okay, really simple there. Now we're going to be looking at range-bound and channel-bound trades here. Okay, this is really important. Range-bound trading is a trading strategy that seeks to identify and capitalize on stocks trading in price channels after finding major support and resistance level and connecting them with horizontal trend lines. All right, so how does this work, guys? So this is basically our consolidation area, okay? You could use this on daily charts, or you could use this through intraday if you got some big fluctuations here. So how does it work? Okay, you're taking on trades that need the most time to get to your target areas, okay? This is the one that requires the most patience and the most discipline. These are the toughest types of trades to make, and these are usually what your day trades are looking like, okay? Because remember, on these, you're also going to have your SMAs, your 10, 20, your 50-day simple moving averages. So they're going to be giving you signals throughout this. But it's really important to always find out if that's a range bound, channel bound trade, and look for those support and resistance areas. So entry and exit areas based on these ranges and channels, support and resistance areas. We target profit areas of the upper area of these ranges and channels. Okay. Target profit area is the upper range of these channels. So let's say, for example, you saw it coming down to base support around 2650, right? And it's been doing that frequently. You always want to look for consistency with the channel range bound trade. Okay. And you want to see it testing that resistance and support all the time here, getting up to that resistance, failing, coming back down to support, getting up to that resistance, failing, coming back down to support, getting back up to that resistance, failing, coming back down to support, and keeps repeating itself until it finally breaks out of that channel. And when it does break out of that channel, then you're in classic breakout momentum and you can trade some regular calls on it. Okay, but for right now, you're trading it when it comes back down to support and you see that first green candle bouncing off of that support area. That's going to be your entry. And then what you're doing is you're looking for your target profit area up to that resistance. Your target profit areas on channel range bound and channel bound trades are always going to be the same. You're always going to have the same resistance and the same stops. Okay, because the nice thing about these types of trades, if you're coming in on that base support, that first green candle that's breaking off that support there, that's going to be your entry. Your stop is going to be that 2650, your base support area. So that's going to be your stop. And then your target's going to be that $30 area. Okay, so you're just trading that consistently, utilizing our trade plan. Okay, so this is just the three types of charts that we're trading. You're still using our trade plan on these systems. Okay, that's really important. So we have our target profit areas and our strict stop loss area if the stock breaks below that support there that we've been looking for. Let's just take a look at Qs, for example. I just want to show you a quick demonstration of this here on a Today 1 Minute. So Today 1 Minute, you were getting choppiness all over the way here. You know, here's your support. You're getting down to support, climbing, getting back down to support, climbing, getting back down to support, and you're getting that climb there. So you could have a strict, that 287 area as your target, and then your stop is going to be that 286 area that it's been coming down to. So it's really tougher to trade and utilize that trade plan with range bound and channel bound charts. That's why that requires the most discipline and the most patience. And those are usually going to be our types of day trades that we're looking for. Because if we take away all these SMAs here, you're just going to see those candlesticks and you could draw pretty simple support and resistance area that are going to be your target and your stops here. So resistance channel bound, this is what it looks like. And you got to be ready to trade like that. And trading candles like this require a lot of patience and discipline. So the hook pattern was a perfect example here of your targets, your stops, and how you could easily identify them. These are really easy types of trades to make. And these trades are usually 30 to 60 days out till expo. Hook pattern trades, 30 to 60 days out till expo. Your momentum trades are anywhere, there's your short-term trades, and they could be up to 6 months out. Momentum, if you're trading the general market there, you could get something 6 months out on a new cycle forming, and that's perfectly fine. The hook patterns, they're usually going to be your short-term trade. And then intra cycle here through the phases, you know how we have our breakout momentum, consolidation back down to that 20, breakout momentum. So intra channel here, that's where you're going to be making those short-term swing trades for like next week's expo or the following week's expo, and taking advantage of a couple days swing trade, utilizing that system and that trade plan right there. So that's what's really important with that. Your momentum trades, you got two things to look at: the whole cycle. So if you want to trade a long-term trade here, you're trading that 6 months out. And then intra cycle here, you're making your short-term swing trades for those quick paycheck trades that we usually like to make there. And then after that, momentum is your tougher range-bound, channel-bound trading, which is obviously really tight trading. You have to be the most disciplined and the most patient during this type of cycle. It's really frustrating if you jump in, let's say you thought it was coming down here, you jumped in, and then you got consolidation for 3 weeks before it starts to move. Well, you know what? During that 3 weeks there, if you don't have something that's longer term expo, number one, you're going to be really screwed for that. And number two, you're not going to have that patience to hold out until you get up to that target profit area. So that's really important right there. The whole reason for this class here tonight was I want you to be able to identify what type of chart it is. Okay. When you see that, say, okay, what type of chart pattern is that? What are the components of that pattern? What are the target resistance and the target stop areas, target profit areas? What are they? Okay, all the way up to target 1, target 2, target 3, stop 1, stop 2. You know, let's just go through our charts here quick on a 3-month daily and see if we could find any. I'm in the Trade Challenge account here, so not going to see too much here. But here you go. Here's Baidu, right? So obviously you got a couple things going for you. Number one, you came down to base support at 130. It held that base support here for over a month. Now it got that first candle above that consolidation area, above that 135. So that candle today, that was an entry for breakout momentum within the cycle. So the cycle started right here when you had the 1020 cross, had that breakout momentum. Now you retraced down to support at that 20-day SMA. You broke that resistance area. You're entering into the trade, and you're looking for that next area of resistance, which are going to be, you know, anywhere between 155 all the way up to 175, depending on what type of time frame you're looking at buying into. So that's Baidu. You know, let's keep going down the list here. Here's Facebook, another one that broke through that channel right there. Yeah, so it broke through that channel. That's why I'm saying it's an easy 300 to 305 target on Facebook going forward. BABA came down to that 50 off of that news. Google's climbing now within the cycle. And you guys remember, we were trading Google for a while. We actually had a paycheck trade on Google right back here, you know, and what happened? You had that big retracement. Well, guess what? If you bought something right here on that breakout for 30 days out till Expo, and what happens? Next day, you got a nice gain. Following day, you're still a little bit ahead, maybe you're down a little bit. And then 2 days later, you know, you really took a 50% hit or a 40% hit, and you're like, oh, damn, what do I do with this trade here? Well, guess what? It's still holding that 10-day simple moving average. You still got your time on your side. These are big candles. You see the volatility. The implied moves are quite higher than normal. So you're holding on to that trade. It's quite distressful when you get into a trade and you quickly see a 30-40% drop there. But just like our United Healthcare, so it's really important to make sure you're implementing those 3 types of chart patterns along with our trade plan. If you're doing that and you're able to identify certain market conditions or chart setups here, then you can make some really great trades here. That's pretty much going to do it for tonight. I wanted to refresh you guys with that. Make sure you guys are understanding that 3 main types of chart patterns that you're trading and looking for every day. If you're in the trade room now, say, hey, Dave, I found a good hook pattern. Dave, I found a good breakout momentum, breakdown momentum. Or Dave, I found a range bound, channel bound trade setup. Those are the 3 types of chart patterns you should easily be able to identify. You guys got to be able to say, okay, Dave, here's a good hook pattern setup. I found this. I just made a trade. Here's my target. Here's my stop. So I hope that helped you guys tonight. If anyone needs anything, please let me know, and I'd be happy to help you guys out or do anything else I could do with you guys. Guys, if you guys need anything else, please let me know. Looking forward to tomorrow. We'll be day trading tomorrow, possibly looking for some more swing trade setups. But right now with this volatility, we got to take advantage of some good day trades like we did today. So looking forward to tomorrow, guys. Hope everyone has a really great night. Stay safe, and we'll see what happens tomorrow. Have a good night, guys.